Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within corporate filings. Today, Voyager Technologies is making waves, and let's just say they're issuing some notes with a very interesting twist. Get ready to dive into a financial maneuver that will have you asking, is this genius or just a really complex gamble? We're talking about billions of dollars convertible debt and some really sophisticated hedging strategies wrapped up tighter than a drum. Stick around because this filing is packed with more financial engineering than a Swiss watch factory. And hey, if you like getting straight talk on these complex reports, don't forget to hit that subscribe button and join our Discord community linked in the description below. So what is this document all about? It is essentially Voyager Technologies Incorporated announcing a big financial move, a significant issuance of convertible senior notes. Think of it like this, the company needs cash, and instead of just borrowing money, they are borrowing it in a way that could eventually turn into stock. And they're not just borrowing a little bit. We're talking about a massive $435 million. This is where the core of the announcement lies. Voyager Technologies Incorporated is issuing these notes, which are basically IOUs, but with a special feature, they're convertible, meaning holders can choose at some point to swap these debt notes for shares of the company's stock, class of common stock to be specific. This is a pretty common strategy when companies want to raise capital without immediately diluting their existing shareholders too much. The interest rate on these notes is a surprisingly low 0.75% per year, which is a great deal for the company if they can manage it. These notes are set to mature in November of 2030, so it is a long-term play. Now, here is where it gets interesting. Before August of 2030, if you hold these notes, you can only convert them into stock if certain specific events happen. It is like a locked door that only opens under special conditions. But after August of 2030, note holders can convert their notes into stock whenever they want. And the company has a choice on how they do this conversion. They can pay in cash, give out shares, or a mix of both. This number right here tells us how many shares you get for every $1,000 of debt you convert. It means that for every $1,000 of debt, you could end up with about 32.25 shares of stock. This sets an initial conversion price of about $30.98 per S-share. This is a crucial figure because it sets the baseline for when this conversion feature becomes attractive to investors. If Voyager Technologies Incorporated stock price goes significantly above $30.98, those note holders will be very eager to convert. The company also has the right to buy back these notes before they mature. Under certain conditions, they can do this starting in November of 2028, but only if the stock price has been performing really well. Specifically, if the stock price has been at least 130% of the conversion price for a good chunk of trading days. This is a way for the company to potentially get out of this debt obligation early. If their stock takes off and they want to avoid issuing a large amount of new shares, this is like a safety net for the note holders. If something major happens with the company, like a merger or acquisition, that is considered a fundamental change. The note holders can force the company to buy back their notes. This protects them from being stuck with notes in a company that has undergone a drastic, potentially negative transformation. Of course, like any loan, there are rules about what happens if things go wrong. These are called events of default. This includes not paying interest, not converting the notes when they're supposed to, or if the company runs into serious financial trouble, like bankruptcy. If a major bankruptcy event happens, the entire debt becomes immediately due. For other defaults, the company has a grace period to fix things. Now, this is where things get really sophisticated. In connection with issuing these notes, Voyager Technologies Incorporated also entered into something called capped call transactions. Think of this as a fancy insurance policy. The company entered into these agreements with financial institutions. If the stock price of Voyager Technologies Incorporated shoots up way past a certain point, these capped call transactions are designed to help the company offset the cost of potentially issuing a lot of new shares to cover the convertible notes. Essentially, they're hedging against the dilution that could happen if their stock price surges. This is the ceiling. If the stock price goes above this amount, the capped call transactions will kick in and help manage the dilution. Notice how this cap price is significantly higher than the initial conversion price. This gives the company and its shareholders some room for growth before the conversion feature becomes overwhelmingly beneficial to the note holders. The cost of these initial capped call transactions was about $63.1 million, which is a substantial investment in this hedging strategy. It is important to understand that these capped call transactions are separate from the notes themselves. The people who bought the notes don't have any rights or claims related to these capped call contracts. This is a direct agreement between Voyager Technologies Incorporated and the financial institutions they're working with. On top of all that, there is a prepaid forward transaction. This is another layer of complexity. Essentially, the company has prepaid for a certain number of shares of its own stock. This transaction is also with one of the initial purchasers of the notes. If Voyager Technologies Incorporated pays out any dividends, the other party in this prepaid forward deal has to pay an equivalent amount back to the company. This also involves a significant amount of money, around $131.1 million used to fund this. Again, this prepaid forward transaction is another standalone deal, not directly affecting the rights of the note holders. It is another strategic move by the company, likely aimed at managing future stock price movements and potential dilution in a very calculated way. And to make all of this possible, Voyager Technologies Incorporated had to get approval for these new financial arrangements. They entered into an amendment to their existing credit agreement. This simply means they updated their main loan contract to allow for the issuance of these notes, the capped call transactions, and the prepaid forward transaction. It is a necessary bureaucratic step to bring all these pieces together. This section tells us how these securities were sold. They were issued to the initial buyers in a way that didn't involve public offering, meaning they weren't selling them to just anyone off the street. Instead, they were sold to qualified institutional buyers, which are basically big investment firms that can handle large sums of money and understand the risks involved. This is typical for these kinds of large-scale debt issuances. This is a pretty important number. If everything goes as planned and the initial buyers decide to buy even more notes, and then if those notes are later converted into stock, it could mean that up to nearly 21 million shares of Voyager Technologies Incorporated's class of common stock could be issued. This gives you an idea of the potential dilution that the company is managing with all these other financial instruments. Under this section, we find out that Voyager Technologies Incorporated made some public announcements about these moves. They issued press releases on the 5th of November announcing their intention to offer these notes, and then again on the 7th of November after the pricing of the notes. And in a move that often accompanies stock offerings, they also repurchased some of their own stock. They spent about $27.7 million to buy back over 1 million shares from existing stockholders. This is often done to offset some of the dilution from issuing new securities or to support the stock price. It shows they're actively managing their share count. Now, this is a standard disclaimer in these reports. The company is saying that they're making educated guesses about the future, but things could change. They list a lot of potential risks from the evolving industry they're in to government contracts and international operations. It is a reminder that while companies plan for success, there are always unknowns. And finally, this section lists all the supporting documents. Think of it like the appendix of a giant report. It includes the actual indenture, the forms for the capped call and prepaid forward transactions, and the amendment to their credit agreement. These are the detailed legal documents that back up everything we've discussed. So, what is my take on all this? Voyager Technologies Incorporated is clearly employing a very sophisticated strategy to raise capital. The low interest rate on the convertible notes is a win for the company, and the combination of capped call transactions and prepaid forward agreements suggests they are actively trying to control the dilution and potential volatility associated with these convertible notes. They are essentially paying a premium to manage the risk of their stock price skyrocketing. The stock repurchase shows they are also considering the immediate impact on their share count. However, all these complex financial instruments add layers of risk and cost. The significant expense of the capped call transactions, for instance, is a cost that needs to be absorbed. While these moves can protect the company and its existing shareholders from the negative impacts of dilution in a booming stock scenario, they also add complexity and could potentially mask underlying business performance if not analyzed carefully. The company's success hinges on its ability to manage its growth effectively in a dynamic industry and navigate the numerous risks outlined in the filing. It will be crucial to watch how these strategies play out and whether the company can truly translate this financial engineering into sustainable business growth and profitability. Alright? That is our breakdown of Voyager Technologies Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.